Hello and welcome to the Quint, BloombergQuint and Hindi Quint. We have a very special guest today, Mr. KV Kamath, who is not only a statesman among bankers, but he is also a statesman among global policy makers, who was heading ICICI here in India. Then he was chairman with Infosys. And recently he just completed his term with New Development Bank of BRICS countries, and he was headquartered in Shanghai. So in the current context, getting his perspective on that will be also of great significance. All stakeholders are looking up to you, sir, for your guidance on the current pandemic and the economic crisis that the entire globe, and particularly in India, we all are facing. I would like you to give us an overview. A flood of data are coming, and some of them are very, very distressing in terms of fiscal deficit, in terms of GDP contraction, in terms of government spending going down badly, tax revenue collections are bad. There are some high frequency good data also. And the entire situation is very incomprehensible. Please comprehend it for us.
Thank you. It's a pleasure to talk to you after almost 6 years. So when I looked at the crisis in March, when the lockdown was announced, and the second lockdown particularly was announced, I thought that this is going to be a crisis which will take a very, very long time to recover from. There will be a very shallow U. It will continue for a long period of time. The bottom of the U will continue for a long period of time. This was corroborated by other heads of MDBs in the meeting that we had, that this pain is going to last for a very long period of time, and the global economy will take years to repair. That was in maybe early April. What I see has happened thereafter is, at least in the Indian context, things are getting reset at a faster pace than what I thought. I repeat that, things are getting reset at a faster pace than what I thought. I'm not negating what you said. There is pain, definitely is pain. But the improvement, to me, is probably not what we had anticipated. So, where are these and why has this happened? I think is a good point to start. See, what I had not expected, and I think most policymakers also might not have expected, is the way the farm sector held. And that not only the production-wise, but evacuation of product, whether it was grains or whether it was fruit or whether it was vegetables to the markets. So that supply chain came on very fast. But we were still unsure whether the agri supply chain is coming back, but is the manufacturing supply chain coming back was not very clear till almost June, or late May or early June, when high frequency data started turning positive and you had a momentum that you could see. And of course, there are some skepticism whether that would continue into the second quarter. I was in an industry association meeting just a few days back, and clearly, and if you take a consensus view of the people who are present there, that's about 170 of industry leaders representing various types of businesses. I think industry is coming back to speed, at least much faster than what I thought. And companies, it's not unusual to find companies now operating at between 80 to 100%, which means, most importantly, two supply chains have been corrected. One is supply chain to the factory and the supply chain to you and me, the consumer. So to me, the momentum is happening much faster than what we had thought of. So now, which sectors are coming back? Clearly, agriculture has come back. Vast sections of manufacturing is coming back. And what is not coming back at the other end is travel, tourism, aviation, hotels. These seem to be under pressure, and real estate seem to be under pressure. The last point that I want to make here is you then have a new global driver, and a driver which in Indian context is even more important, what I call the digital super cycle, which is on us. And it is like it has been forced on us. We can talk about it later on. I think there are wonderful examples of how people have adapted to this super cycle. And that provides momentum. So I would think that along with this coming back to speed and the government steps taken, the 10%, I would say that the handholding that they did, in a variety of what I would call interesting ways, has enabled us to come back to this level. indeed there is pain, and that pain we expect to be elevated over the coming quarters.
Very important point you are making, sir, that the recovery is much faster than we had anticipated, and we are coming back to normalcy level in some sectors. So we will talk about sector wise. Let's first focus on banking sector, sir, because that is the backbone of the entire economy, and you just completed your RBI report. And the interesting thing that there are not many applicants who are coming and applying for that kind of restructuring. But the other commentary that we are hearing, that the real numbers are still not known. What do you think is happening in banking and financial services sector? How deep is the stress?
Yeah, again, even before I came back as a part of NDB, when we were looking at global banks, which is sharing thought with other leaders, the fear was that global balance sheets of banking institutions would also be, in great and severe pain. And we had thought that that might be true in India also. Now, very interestingly, I saw two things happening. One is, for the helping hand was given by the Reserve Bank of India early on with the moratorium 1 and 2. So that provided some helping hand. But more importantly, we saw several of the leading private sector players go and so moto raise capital. I think that would mean that they are well equipped. Large part of the banking system is government majority owned, and I'm sure as needed, capital will be brought in. Having said that, everybody would have a particular idea as to what could be the severity of the shock for the retail customer and for the corporate customer. Clearly, between, say, moratorium 1 and 2, the reduction in number of people who, in a way, opted for moratorium was good news. And then, in the context of the committee work that we did, and now, from what, again, my knowledge is second-hand, really, which is from the banks, and that is basically on the basis of what they have said in public domain. Looks like things are going to be milder than we thought in terms of what we've done. Now, there are two reasons for this, Sanjay. One is, if you go back, a cleanup was already done. And, Reserve Bank, through the June 7th circular last year, had provided a mechanism by which you could do a cleanup. One. Second, consequent to that, whatever hit had to be taken, those hits had been taken. And thirdly, capital that was required to be brought in consequent to that also was brought in. So you have, I would think, the Indian banking system in much better shape than it was in the past. One more point, which sometimes we slip in recognizing. If I look at the balance sheets of Indian corporates, and I'll take, for example, the large corporates, and then same would hold true in varying measure for others. So if I look at Sensex 50 companies, they are hardly leveraged. The leverage is extremely low. Look at it 10 years back, they were leveraged 1.8 to 2:1. And if I look at it 20 years back, during the 2000 crisis, they were leveraged 3.8:1. So 3.8:1, 1.8:1, and hardly any leverage now. So on one hand, you had corporates which were stronger. On the other hand, you had banks which had already gone through a cleanup process with capital coming in. So if I look at it in retrospect, we have a on the ground situation where the players, the sectoral players, are probably going to be less harmed than otherwise because of the steps that we took in the 12 to 18 months.
Okay. So before we, in the second half of the interview, I want to really capture your top suggestions and your vision that what needs to be done and how do you prioritize them. But let's focus a bit more on the challenge and the current stress scenario. So you mentioned some sectors, and especially if you look at the entire manufacturing sector, followed by real estate and infrastructure, that we always are told that can only be the driver of economic growth in such a distressed situation. So your thoughts on real estate, construction, telecom and power sectors?
Yeah, let me start with the really hard hit sectors at present. And that would be, really speaking, real estate. I think real estate, again, interestingly, if I look at numbers, in other than metro cities, it seems to be picking up. There's a dual problem there. Is our property prices overheated, and can activity start? The answer is not consistent. The answer clearly in other than the metros is much more comfortable than in metros. So in the metros, it may take a long time or a longer time, but in other areas, it will come back quickly. And there again, I think we can provide a helping hand in terms of how to restructure this industry. And any company which was performing as on the cutoff date that Reserve Bank has set, I think we'll go through a fairly good restructuring process. This is one part of the second part is infrastructure that you talked about, which could be a pain point. But very interestingly, again, I mentioned that I was in an industry forum. There, I understand that, for example, earth moving equipment. Somebody from JCB was stating that their production this month was something like 30% over the previous year, and the highest ever that they have produced. Interestingly, again, they said new markets are getting developed, like the Northeast area, and that is a new market that they are looking at. So, very interesting changes that are happening in terms of, I would say, momentum and pickup that are happening in that area. So, I think it will come back. Plus, the government is talking of fairly deep and wide infrastructure spending. I think this is going to help. Where is the problem? As I see, the problem is going to be then in the residual sectors, which may take a longer time. It's the nature of things. Travel, tourism, aviation, which includes then the travel, tourism, I would add hotels. These sectors will probably take a longer period of time. There is one other sector which we don't normally talk of, so they take it for granted, and that is, to me, very important, the self-employed sector. The self-employed sector, they are coming back to speed. These are all small mom-and-pop type of operations. The person on the street who sells you foodstuff, who sells you your vada pav or your bel puri, the person on the street who fixes your shoes for you. I think myriads of them which provide daily needs to us. I would think that they have to come back into the economy, and that will happen when opening up happens. And I would think that today's lockdown or yesterday's easing of lockdown will accelerate this. So to me, these are the sectors which will continue in the pain. The others, I think, are already on the path of growth and momentum.
Yes, sir. I know that it really depends on lockdown to get back to that kind of normal. But in the process, the job losses are of a very severe nature, even though some people are coming back to the jobs. But the number of unemployed or underemployed is very, very worrisome. Don't you think so?
There are three areas that we need to look at before we address this. I would rely on, to some extent, the CMI data. I think the data going back even 25 years that I have looked at have been reliable. So there was this initial number of job losses in the organized sector that they talked of in April, and then they talked of those jobs coming back in May. So I think one part of the economy has come back. I would think there is, again, I saw data saying that there continue to be job losses in certain other areas. So I think there are two areas where there are job losses. One is clearly the self-employed that I talked about, and that has to come back for things to be fully normal. The third is manufacturing sector has to come back to full employment. So, you want to add a fourth? That is the white-collar workers. Now, to me, if all these sectors, very interestingly, the white-collar sector is going to be the most challenging. The reason is there is a new normal, which the employer also has realized. And I think hard questions are being asked, do I need to have the same level of staffing that I had earlier? So I would think that we will have a challenge in quickly reskilling and putting these white-collar employees into a job in the next, I would say, 12 to 18 months. Because otherwise, there I think is where we will see the most pain. Others will all, in a way, find a normal.
And to do this job, actually, private sector has to do this. Government alone cannot do this. For that, not only few large corporates, all corporates have to be supported. The commentary we keep hearing, and I want your thoughts on that, sir, which is, why is government not doing enough? Is it doing enough? And why is it not coming up with bold fiscal measures? Why is it not still only depending on monetary fiscal actions? And where do they have resource? So how to mobilize resource, how to get government to see all these things and come up with a comprehensive plan soon, because it has been a very, very long wait, painful wait for them.
I think again, it's an interesting, very interesting question that you asked. I will just complete, or segue into it by saying, where will the new jobs? As I said, the new jobs will come from what I call the digital super cycle. And I would think the white collar employees who might currently, have lost their jobs, I think are fairly well suited for this jobs in this area with some degree of reskilling, not necessarily very deep reskilling, but some reskilling. And I think we are aided in this for the fact that we have, digital broadband available today at a cost and quality that we never could have dreamt of. I can say that if digital broadband of this quality and cost was not available, I would have been, first of all, not been able to speak to you. And if I were speaking to you, my mind would have been, under a cloud, because without much hope. So the digital infrastructure that we have is, actually a game changer for this country. And it has happened just at the right time. So that is a given. Now, who should do this, the government or the private sector? I would think, and I always believe for 25 years, that the government's job is to act as a catalyst and to set things in motion. And then, it should be something that happens on its own, exactly like a catalytic reaction. I would believe that will happen. Now, has the government done enough? That's a root question. Honestly, my view is that the government has done what it should do. The initial handholding that they did addressed the sectors which had the most pain at that point in time. And, we need to give it one more quarter to see whether the pain has been addressed. My own reading of it, putting in dipsticks here and there and reading, indicates that indeed has, in a way, contained what could have been otherwise a big challenge. This is the first part of it. That is, this I'm talking of support to people who had to go back to their village, giving them sustenance. And the MSME side, what they did, the agriculture side, what they did, provided support. I think the September 6th or 7th circular of the August 6th and the September 6th circular of Reserve Bank provides sustenance to others. So now this question that you raised on should we be doing more on the fiscal side? One could always be tempted to say, yes, every government should do more on the fiscal side. But I think we need to see at what cost. See, nothing happens without a cost. And I think the government always balances the costs and the benefits. And my own view is that they have assessed it correctly. And they, I think, have stuck to two things. One is, yes, the fiscal deficit is going to rise, but it should be contained at a level which doesn't destroy the fabric of this country in terms of its economy. And I think the numbers that they have pitched, the conservatism that they have exhibited, I think is right for this country. So I remember that whenever I talk to policymakers in the past, when I say past, when I used to be wear an executive hat, gently people would tell me that, look, ultimately our actions, the consequences are going to be borne by maybe 1.2 billion people then, and now 1.3 billion people. So one has to be extremely careful in terms of what the consequences are and be conservative. So, and I find the same thing in terms of whether it is fiscal policy or monetary policy, exchange rate management or interest rate management. I think we have taken a conservative approach, and I fully endorse this because it is too much of a risk. And there are too many examples of things that are going completely haywire in other countries for us not to reckon it. And I would think that prudence, fiscal and monetary, is what I think this country specializes in, and we should continue to do that.
Sir, knowing your aggression, how to drive economic policies, in that case, we will be prisoners of a very low level of growth if we take this conservative path. I can understand the political leadership always is fearful of inflation. But what about massive public works and high degree of infrastructure work that will create jobs, that will put us on the trajectory of high growth, that will result in prosperity, and we will become a middle income country. We will grow beyond middle income country.
I agree, but I think in every strategy, sometimes there is a pause. And question that you're raising, I'll paraphrase it as, how long should the pause be? My own situation is that if we can aim for, not losing any ground in our growth path by, say, March of next year. And today, most of the pundits are saying that by March for 2021, growth should be flat. So it should be, there's no growth, but there's no negative growth. I would think that we are on the way to that. And we will have our answers in 1 month from now, when less than 1 month from now, when second quarter numbers start coming out. And I would think a combination of good numbers, the push of the digital economy, and I would say some limited infrastructure spending, plus I think an excellent agricultural section, plus I would think moving of agri-processing industries to rural areas, I think is going to provide a different mix and a different momentum to growth. So, and then I would think infrastructure and other things will happen. So I remain an optimist, and I would think that we need this 6 months, the next 6 months, to heal, and then growth will happen on its own.
Right. Sir, on digital infrastructure, like you, I am also a big digital bull. But the problem I see, this connectivity and the sudden adoption of digital way of life is an urban phenomenon. Connectivity still remains a big problem for Bharat. Spectrum remains a big problem for the country. More than that, the regulation is a big issue in wake of data protection and the threat that we all are seeing. If we don't fix that, we will not accelerate.
Yeah, on the first part, that is getting the connectivity to rural areas and the mass, I think it is already happening, Sanjay, at a pace that we are not probably able to grasp, because we are not seeing it. And I'll explain why. The whole broadband revolution, if you ask me, is less than 1 year old. And the collapse of prices, the pervasiveness of broadband is less than 1 year old. This was of that 1 year, 6 months, we have not really seen what's happening in the rural area. Now, I can quote several instances where, very, I would say, signal dead areas, where you could not even make a call, leave alone an email or this. Now I'm able to talk on a video, completely in a rural area where otherwise there was no reach at all. And this all in the last 1 year. So I would think that part of it will catch up, because we are in, at a baby stage in terms of what we can do in the digital world. And I think things are happening at that pace. Things are happening at that pace, not only because, there is a data model or there is a voice model. I think things are happening in that space because of the business model. If the farm is getting connected to the urban housewife, I think you need to have connectivity to the farm. And separately, I'll give you stories of how I'm finding the farm getting connected to the housewife, and how green green groceries and fresh vegetables are coming directly from farm to the market. Mm-hmm. So a lot has happened, and I think this will continue to happen. Secondly, I think in terms of data privacy and so on, I think this is going to be, again, a debate that will not end quickly. The reason is very simple. This also is in a baby stage. So its evolution and form and shape will have to go on. And the questions that are asked are correct, are right, and happen when any new industry is coming to the front. So this is going to be an issue that will. But my belief is, yes, those will be addressed by the by. But the march of the digital economy is not going to be hampered by these things.
Mm-hmm. Before I move to my final question, I have one more question that is in the context of your experience in China and our current relationship and the global dynamics that are at play. We thought that we are going to be a great beneficiary of this disruption and we will become a part of supply chain. I see very little real solid progress. I don't think many investors are actually going to put their money, the kind of current environment we see in India. Are we going to miss this bus?
Again, I think there we need to give it time to understand what is happening. My own view is that in terms of Atmanirbhar, we will manufacture more for ourselves. We will manufacture quality. We will manufacture global competitive products in partnership with global players. But we will do it for ourselves. The reason I'm saying this is, in a way, segues into the next question. If you look at the growth path of China and India, it is different. China adopted an export-oriented growth path when they did not have a large enough domestic market. I'm talking of almost 25, 30 years back. They adopted the export-oriented growth path. Today, we have a fairly adequate domestic market to provide us the momentum. And our strategy probably is going to produce for India and produce for the world, rather than produce for the world and produce for India. So Atmanirbhar in that context is going to be probably driven internally. And Sanjay, there are several other components of the supply chain. I was surprised when initially, I'm talking of April, suddenly we heard that, because of the problem in China, because of the flu problem there at that time, it was closed. The exports are not happening. Our APIs are not coming. I said, hey, wait a minute, why are we importing APIs from China? Then somebody else said, but my auto components are not coming. Hey, same question, why are we not producing ourselves? I think these industries now clearly will become, the change agents in terms of producing for the domestic market and producing for the export market, along with, I think, several other things. I would also believe that I'm not, 2 days back, there was the trade surplus numbers that were talked of. And people are saying that, it is the lack of imports which has driven us into a situation where we are positive. I would think it is celebration. Why should we think that it is because the imports didn't come in, we are going to suffer? I don't believe so. I would like to believe that imports didn't come in and we have substituted imports. If we have substituted that API, if we have substituted that auto component that is coming in, good for us. So I would like to see and track how we are able to avoid import, I would say, in large numbers and turning that into a domestic opportunity. I think that will be the first phase of our creating supply chains for the world. And I think that's the path that we could. Our Indian industry is well equipped to do this. And I wish them well in this, accepting this challenge.
Right. Sir, you are very optimistic about the way forward, which is great to hear, because generally I'm sure whenever we talk about nice things or bad things, they get amplified. So it is very instructive conversation that we have had today. But before I let you go, I want to ask my final question, which is, what are your top 2 or 3 key suggestions which will really push us for a faster recovery? Because you are indicating 21-22 could be the year when we will be back to the old normal, that is 2019. But many other experts, they believe that before 22-23, we are not going to come back to 19 level. In that context, what are your key suggestions?
I want to correct that. Maybe I didn't communicate properly. What I mean is, by this year, 2021, end of 2021, we will be flat. But the next year, compared to the year ending 2019 or 2020, we will be positive. How much of that, are we going to be in low single digits, mid single digits? Early to call. The next 6 months will give us hope. But I am actually much ahead of the curve than most people that I've heard so far. I've heard people talk of next year, year after, and so on. No, I would think year 21-22 is going to be a positive year. Whether it is going to be 5% or 7% or 10%, we will know in due course. So there could be some base effect there, but I'm talking of comparison to 1920, previous year. So I think recovery will be much quicker, and we will be pleasantly surprised by it. How am I saying it? Based on what I'm seeing around me. So what needs to be done, as I say, is make sure that you lend a helping hand to those industries which are in severe pain. As I said, most industries are going to be taken care of, but those 4 or 5 that we talked of, I think there is need to think, how do we make sure that we don't push them, or they are not pushed to the wall? What sort of helping hand is required without creating too much of a challenge for these industries? I think, keep the financial system secure, and I think that the Reserve Bank is clearly on top of it, and making sure that capital is there and space is there to grow. And 3, keep your fiscal house in order, which again the government is clearly doing. So honestly, I gave my 3 thoughts, but all those 3 are being implemented by the government. So I would think by and large continue with the existing policy, and we will see things happen which we probably don't believe.
Very, very interesting, and as always, very thought-provoking conversation with you. Thank you so much, sir, for your time.